This is our weekly Power Hour episode. I am one of your hosts, Ryan Henderson, and I am joined, as always, by the one and only Brett Schaefer. On these episodes, we talk all things financial markets, any news, any items that we bring to the table, and we've got plenty this week. We're seeing rocket companies go scorched earth and make some major acquisitions. Dollar Tree, a major disposition, I guess. They're getting rid of basically half of their business, even though it's not really half of their business. And then we've also got some other fun topics. We're going to be looking at beaten down stocks, what beaten down stocks look attractive to us right now. There's some big Tesla delivery news, Nintendo Switch. I'm going through all of it, but we're going to get into all of it in a little more detail here in a second. Before I do, Brett, welcome to the show.
Glad to be here, Ryan. How are you feeling on National Liberation Day? We're recording it on the big day. I think of it more of a liberation day for Nintendo shareholders, as we've been waiting years and years and years for this new console. But how are we feeling?
Feeling good. Markets are fun again. Is that, can we just
I
title the
guess,
episode,
yeah.
Markets are fun again?
Sure, sure, for Trevor Milton, maybe. I think it might just be National Liberation Day for Trevor Milton, which we'll get into. I thought that story was officially closed, but it looks like we got a sequel.
Yeah,
And I'm
boy.
excited because it's going to give us stuff to talk about, but morally, maybe I'm not too excited about it.
Yeah, that part was a little disheartening to read. We'll talk about all that happened there in a sec. Before we do, though, we want to talk about our friends at Interactive Brokers. Interactive Brokers is the professionals' gateway to the world's markets. Interactive Brokers offers commissions starting at $0 on U.S. listed stocks and ETFs with low commissions on other products, and there are no added spreads, ticket charges, or account minimums. Clients in over 200 countries and territories trade stocks, options, futures, currencies, bonds, funds, and more on 160 global markets from a single unified platform. Clients earn interest rates of up to 3.83% on instantly available cash and pay margin rates up to 53% lower than the industry. You can also earn extra income on your lendable shares, and IBKR's powerful, award-winning trading platforms help every level investor succeed, from beginner to advanced, on mobile, web, and desktop. When placing your money with a broker, go with a broker you can trust. Make sure your broker is secure and can endure through good and bad times. We use IBKR here at Chit Chat Stocks for their best-in-class international coverage, and you can too by heading on over to ibkr.com. Interactive Brokers is a member of SIPC. Brett, where do we want to kick things off this week?
Can we talk maybe the Elon update? Get it out of the way. There's multiple things in here. I know it's not stuff that we actually enjoy discussing, but it's things people like to listen to as much as I want to hear you go through Dollar Tree. I don't know if that's going to retain the listeners as much as XAI and Tesla deliveries.
Yeah, there's two things we do on this show. Two things we try to do: deliver real value and talk about what people care about. So right now, let's talk
It's a
about what
balance,
people
yeah.
care about, and then we can deliver some value in a second. What Elon's in the news every week, but what's happening this week?
Well, did you see this? XAI merging with X? Did you even know these were separate companies?
No clue.
No? I have an idea, Ryan. Why don't I don't even have a house. Let's say I have a house. I'm going to sell it to you for $1 billion. And then you can sell it back to me for $2 billion. And then we're both, well, I don't know what that would net out to, but I think we'd both be billionaires at the end of that, right?
Yeah, the only difference here was you would be selling the house to yourself.
Yeah, I guess in this transaction, it's even crazier. Okay, here's what's happening. And this is a quote from the Wall Street Journal. Elon Musk's artificial intelligence startup XAI has acquired X, the social media platform he also owns, in an all-stock transaction that fuses two of the billionaire's biggest technology bets and assigns the new enterprise a lofty value. XAI is valued at $80 billion in the deal. X at $33 billion. I don't think the people that took the levered buyout on X are doing well at all. On the one hand, Musk seems to like the letter X, makes it quite confusing here. The only other thing I thought was interesting, which makes it even worse in the situation, is that the new valuation, this is a quote again, the new valuations were determined during negotiations between two Musk arms, which both had the same advisors, people familiar with the matter said. So, what kind of negotiation was going on here?
My when I was a kid, this is kind of a slightly embarrassing story. Uh, I used to get bored and I'd play board games against myself sometimes just for fun, like I was practicing.
Oh, yeah, yeah. We've all been there, bored at the family reunion, 6 years.
Monopoly, I would make trades with myself, and I would trade properties. This is that at its extreme. Like, they're just
Yeah.
they're giving themselves their own valuation, and, uh, does any there's no real value being created here, right? Like, there's no investment, there's no outside investment coming into this, so it's not like it's purely
Yeah, I don't
just
think
whatever they
so.
want it to be worth, right?
I think so, yeah, I don't know. I think they're merging it so they can probably raise more money. Not sure.
Maybe they
Not
can
sure.
use
I mean,
all
they
that
were essentially
AI. Maybe
yeah.
they can use all that AI to get rid of the, enormous bot problem that they currently have
Oh,
on the
I think
platform.
that's god. Yeah.
It's amazing that the platform isn't I mean, it's not gotten any better since it's been
No.
acquired. I'd say it's probably gotten a little bit worse, really not much change at all, and there's this XAI part that's a component of it, like, this to me is the epitome of, like, there's useful AI, which I think is, like, truly innovative, and it is changing the world, and it's changing the way things get done, and then there is bullshit AI, frankly. I know I'm sorry for any of the parents with kids in the car that are listening to this. I think this is BS AI, and I don't you can just slap AI on anything,
You
especially
don't
if
like
you're
Grok? You're not a Grok guy?
look, I know people like Grok, and he's got a huge database. It's got a huge database to
Yeah.
pull from, but, like, okay, I asked Grok a question about a company that I tweeted about. So I tweeted it out, and then I asked Grok, like, what were the earnings like for this business, just to try it out, and it improperly summarized my own tweet and just gave it to me and said, "Source here," and it's like, is that real innovation? Like,
Yeah,
tweets are
right? Come on.
already succinct, like, posts. Do you really need summaries on it?
Yeah,
Um,
that's why we're spending $10 billion on a supercluster. It's gonna be get fantastic ROI. And this relates to another maybe we can shift right now into the SoftBank and OpenAI partnership that I think flew way under the radar, unless I was just off online investing forums while this was going on, because I feel like excuse me, way more people should be talking about this one. Did you see this? Were you
largest private investment round of all time by a long shot, if I'm
Yes.
not mistaken.
So it looks like that OpenAI exhausted Microsoft. Microsoft's kind of done with them. They're not going to give them any more money, which is funny because people were talking. I don't know. They gave them so much money. It looks like they just need even more and more. So SoftBank and OpenAI are officially partners, I guess. Investment partner. SoftBank is really just their investor. SoftBank is going to be funding OpenAI with $40 billion over, I think, the next 2 years, is part of what the contract says. $10 billion will be debt funded. And if all the money gets invested per the terms of the contract, OpenAI will be valued at $300 billion. And this does not include the $100 billion Stargate investment that both the companies are doing to invest in data centers. OpenAI will be required to turn into a for profit company while this, I think on some timeline, maybe it's before the end of the year. Ryan, when are we going to get the IPO here? And are you buying this cash incinerator?
No, I'm not buying. The On the one hand, 'cause the AI, like, I don't know. When we talk about AI, it just feels so circular. Like all the same companies that are supposedly
Investing in
doing
each
all,
other.
yeah, doing all the innovation are also investing. We saw this with the CoreWeave IPO too, where they got like some big funding from NVIDIA, but NVIDIA is also their largest like customer or something like that. So it's like, it just feels so circular. On the one hand, I feel like OpenAI has some great technology. It's a great B2B platform and it's being used by tons of businesses. So I think there's some value that they're creating. It's very expensive to do so. I think ultimately I see all these numbers and I just think, wow, this is good for NVIDIA. DeepSeek
Yeah.
apparently was able to copy them at a fraction of the price. I'm kind of seeing the DeepSeek talk subside now, but the, it's hard for me to see how the okay. Right now, there's Gemini, there's a whole bunch of other AI offerings. You've got Llama, you've got
You know,
um,
Gemini is available for everyone for free now. It's great.
it, I don't really use the just pure conversational AIs, but I mean, on the business side, you get like each AI provider has certain things that they do really well. I know Google, they have like phenomenal detection models, and each business kind of has pieces of it that serve applications particularly well. Doesn't this, I don't know, get commoditized a bit? Like the only real area where I see this driving just clear value in the short term is the cloud providers giving some sort of an AI type offering. So like the hyperscalers giving, for example, like user detection models kind of thing, where companies can leverage that and there's instant revenue for it. And that's going to require com- extra compute, but it just, I don't know. I see these huge numbers and I just kind of, despite how big they truly are, I kind of don't care.
Okay. Comes down to this question here, and this is because SoftBank is making the investment. OpenAI, are they WeWork or Uber?
I'd probably lean more Uber between
Yeah.
those two. Yeah,
So long-term
closer.
leases, short-term. What makes them more like Uber? I feel like the business model is a lot like WeWork.
Um, well, I would guess that the outcome ends up being hopefully closer to an Uber
Well, what
than a
changes the
WeWork.
unit economics here? I just don't really understand. No one's ever made a good point to me about that. Like, what changes? Are they just magically gonna hope for more efficiency?
Like, how does the CapEx come down?
How do they get positive return on invested capital? Yes.
I don't
Are we
know.
all gonna pay $1,000 for this a month?
No, but businesses will pay more than that.
Look, their whatever their revenue is or whatever their earnings are from what we've seen in sources, they're blowing money.
So is
It's
Uber.
like they
Uber had -8, I think -70% operating margins when they came to when they IPO'd. So
yes, but that was not because of the gross margins.
are the gross margins negative?
I would assu well, where's that DNA going?
I I don't know. I'd like, before I make any assumptions on whether they're Uber or WeWork. Here's the one thing. Okay,
You
I will
wanna see
give
the financial statements.
yes.
That's fair. That's fair.
If I think we don't give enough credit to just how willing Adam Newman was to incinerate cash. I know we want to think OpenAI is doing the same thing,
Altman's not? Ho they've considered way more cash, way more.
but I think the light at the end of the tunnel, Altman can see it. I don't think Adam Newman ever cared.
What do you think he can see? AGI? You're an AGI guy, Ryan?
I think he can see investments from Masa-san, that like just continued
You can
investments.
see
That was
you can see Dubai.
you're talking about Sam Altman. I
You can
don't
see
know.
the sovereign wealth fund money.
It's probably hard for Sam Altman to reel it back in at this point, would be my guess. Like every
Then
step of the
they
way,
go
they've just been,
bankrupt. I mean,
until he maybe has to. But every step of the way, people just want to give him more money. Here's the thing that, I think about this all the time. There's that whole like joke of a scene in the show Silicon Valley where they're like, maybe I should have taken a lower round. There's some real value in taking a lower valuation in the private markets than getting an extreme valuation that you can never fulfill. Like it becomes so hard to operate at the business level. The employees, all their options are probably underwater in 5 years. It just, I don't know. I would be worried about a company. Like if I were running this company, I would hate having my valuation. And maybe this is why people like me don't run these companies. I would hate having a valuation that extreme.
of $300 billion. I think the biggest concern is that they have no choice but to raise tens of billions of dollars. And
It's
people act like it's a good business. What? I mean, better business than CoreWeave, but CoreWeave is, I think, almost a guaranteed bankruptcy, but that's another topic.
what I worry about is the CapEx treadmill. This
Yes.
when does it? Because theoretically, you could just say, all right, we're just going to stick to our latest model and not invest in the newest round of chips and not try to like upgrade our model that much. But then guess what? You have 5 other real formidable competitors that are willing to throw that cash in the incinerator, but they have a sort of a cash flow machine. But when I'm thinking mostly about Amazon here, Google, Microsoft, I guess they're kind of a part of Microsoft now, but
Amazon was after the dot-com bubble, they were self-funding. They didn't raise any more money. It's called a good business, not a bad business. Meta, Microsoft, Amazon, Apple, all of do they have to raise round after round after round after round in the 21st century? No, never. Meta was profitable since the get-go. Alphabet profitable since the get-go.
Yeah, I would not claim this is a wonderful business, but I think WeWork was worse.
Yeah, hard to get worse than WeWork. But that's why I think the question's hard. Are you more WeWork or are you more Uber?
I tend to not touch anything that SoftBank touches. And that's not just like, it's not like a principle I have, like get away from SoftBank. It's just whatever they touch trades at ludicrous valuations. Now, maybe I'd touch Uber today, but it's a long ways away from its SoftBank involvement.
Yeah, I don't even, they definitely invested in them. They invested in everything back in the day. All right, we got plenty to discuss today. So another topic, Ryan, you want to talk Dollar Tree and Family Dollar? The most exciting industry besides AI, dollar stores.
Yeah, so the complete opposite side of equity markets or markets in general, the stable, honest dollar store. So Dollar Tree this week had earnings. They announced that they are selling Family Dollar, which, let me give a little bit of history. I believe Dollar Tree acquired Family Dollar in 2016. Might have that date wrong. Brett's nodding his head here. So 2016, I think the price tag was around $9 billion. This was a more necessity focused type. They were more on the Dollar General spectrum of dollar stores. So kind of slightly lower income consumers selling necessary goods. Whereas Dollar Tree is more on I think 80% of the items they sell in store are discretionary. These are things like knickknacks, arts and crafts, things that, and they lean more higher income. Anyway, since the acquisition, Family Dollar has just been an absolute drag on margins for Dollar Tree. It's been totally value destructive. This week, they announced that they're selling Family Dollar for $1 billion. And I think they have to cover some of the corporate expenses even after this. So it's going to continue to be a drag. I assume they would have sold it maybe for zero, like maybe as close to liquidation as possible. And I honestly think they're happy to get rid of it. I mean, they took, what is this, an 85% write down over the last 8 years relative to their acquisition price, and Dollar Tree shares jumped. So it tells you what the market thinks of Family Dollar being in that corporate umbrella. Now, here's the part that I get interested in. Dollar Tree, for the last 8 years, has been good co, bad co. You've got great company in Dollar Tree. It's kind of a unique, it's a unique offering that can buy cheap goods, sell them to a slightly higher income consumer at great margins. We're talking about double-digit margins here on the core Dollar Tree banner. For context, the Family Dollar is anyone that's selling like the necessary goods. They're not generating double-digit margins. That business, what's left of that, I think, is potentially attractive here. Our friend Alex Morris put together some pretty reasonable figures, I would say, and actually a really good write-up in general. They are starting to shift all of their stores to really move beyond the dollar price point. They're moving to kind of multi-price up beyond that, and it's just leading to not only like are they no longer trapped by the dollar amount, but they can also offer more. They can provide a better service to customers by having slightly higher price points. They can, move like whether it's like holiday knickknacks, balloons, that kind of thing. Like you can offer more packages, different styles, all this stuff. If you're willing to move, if you and the customer kind of have this unwritten agreement where you're willing to move beyond the dollar price point, that's what Dollar Tree's got. And they're in the process of migrating their stores towards that model. They have an enterprise value of around $17 billion right now. That includes the potential cash inflow from selling Family Dollar. I don't think it's unreasonable to assume that they can do $2 billion in earnings before interest and taxes in 2 to 3 years.
So sub 10x earnings, yeah.
Yeah, a little under 10x 2 to 3 years out earnings. Does this remaining Dollar Tree banner, the remaining Dollar Tree company, excite you at all here?
Yeah, I think so. If I remember correctly, and I should say, I did read the write-up this week at the TSOH Investment Research Service. So give them a shout out. That's where we got some of this info. But go read that full write-up and subscribe to that premium service. We love it. And he's been on the show plenty of times. If I remember correctly, they are a pretty good repurchaser of stock. And that's also attractive for a lower growth business model like a Dollar Tree. And if you look at how well Dollarama has done in Canada, and I think actually expanding a little bit outside, if I remember that correctly as well, to Latin America, stocks can work quite well if you get this business model right. Don't get too aggressive. Don't try to do anything stupid, and just consistently go and go and go. Now I'm getting something about my stable internet. Could you see me, Ryan? Could you hear me?
I can hear you. I can see everything's good so far.
Good. I got one update, but now it looks to be back.
I find this. I think I might give sort of a deeper look at Dollar Tree from here.
Your next research episode, maybe?
Maybe. Here's what I like, and in general, over the years, I think I've come to appreciate a business with a singular focus. And people talk about optionality all the time and how great that is. I think it's really nice when you have a management team and all your resources and all the employees beneath the management team that can dedicate all their focus to one banner, to one business, to improving that customer experience. I think you can get a lot better results. Dollar Tree, I suspect, is going to be in that situation as they move away from this Family Dollar sale. It's the same with like Spotify versus Apple Music. Obviously, top executives at Apple are not worried about Apple Music. They're worried about iPhones, hardware, everything beyond that.
Roku.
Spotify, you see that with Roku versus a lot of the other connected TV hardware.
It's amazing how bad the Google interface, the Apple interface, the Amazon interface, and the Samsung interface, just as a side note, is versus Roku when you have some of the best engineers in the world at all those companies.
Yeah, and I think that comes down to focus. Honestly, you're even seeing it now with PayPal versus a lot of the remittance providers. PayPal got away from I don't know if it was ever necessarily their core business to be like remittances, but it was used for remittances.
And it was
They,
profitable, yeah, highly profitable one.
yeah, it's probably still quite a good profit driver for them, but volume's pulling away because fees are high, and it's kind of, I guess that's maybe more innovators' dilemma, but I don't know. I really like a business where they have a singular focus on serving a specific customer. And I think Dollar Tree is going to be able to do that now. All right. I wanted to show this as well. Starting a new segment here, maybe. We'll see. This might just
Yeah,
be
the FinChat chart of the week.
yeah. There
Brought to you by FinChat.
we'll maybe lump in some other
Could be a
chart
non-FinChat
providers.
chart.
Yeah.
Yeah.
But this week I saw this
You want me to
and
share, or are you gonna share?
you can share here.
Okay.
So basically I took Universal Music Groups and Warner Music Group's free cash flow margins, put them on the chart, compared them against Spotify's free cash flow margins. And for the longest time, the big labels, Universal, Warner, I don't think we're able to look at the Sony Music operating margins, or at least free
Yeah,
cash flow
because
margins.
it's a conglomerate, yeah.
But you actually can look at that division on FinChat. That's separate. Anyways, Spotify surpassed the label's free cash flow margins over the last 12 months officially this quarter. So Warner Music Group has 11% free cash flow margins. Universal has 14%, and Spotify officially has 15%. Have the tides shifted? And the business models are different. So, and there's some working capital benefits at
Yeah, they're
Spotify as well.
actually like the working capital advantage that Spotify has is a working capital disadvantage that the labels have.
Yeah. But is it fair to say now that, because for the longest time, the biggest hiccup was the labels, the labels, the labels. They're going to hamstring margins for Spotify forever. Have the tides shifted? Has the negotiating leverage shifted today towards Spotify's favor?
I think a bit, but I tend to, and maybe I'm just buying into what Spotify management says, but I tend to agree when people say that they both like each other at the end of the day and they both make money for each other. Where if you look at the growth rates for the labels, I'm not an expert on these businesses, but it seems like the Apple Musics, the Amazon Musics, and maybe even the YouTubes a bit are really not growing that well for them at the moment, where Spotify is giving them outsized revenue growth. They're implementing these price hikes. And the more Spotify grows, the more money now Universal and Warner are going to generate. And Spotify, if they become a larger percentage of the music industry, is going to have better operating leverage, or excuse me, better negotiating leverage. But I don't think this is something that it's how would I describe it? It's not a Netflix situation where they're gonna start producing their own music. The dynamics of the industry are just so different. I mean, you can't get a Beatles and Nirvana to just the lifespan of, like, artists and stuff is almost forever. But I do think Spotify has more leverage than they did 10 years ago. That's obvious, but I think they're both gonna work in quite the symbiotic relationship over the long term. They're gonna search for and hopefully open up new monetization strategies, tickets, stuff like that, live events, whatever it is.
Yeah, the other
And
thing
they can
is,
both be good business models at the same time.
yeah, I think both can generate good returns for investors. The I wouldn't be surprised though if in 10 years the main hang up with investing in the labels is they're at the they're they have
With
customer
Spotify.
concentration risk, that
Yeah.
Spotify has negotiating leverage, because we
YouTube
also,
should be big. YouTube will
yeah,
still be big.
yeah, but not to the same degree.
Yeah, it's
And
true.
it's we're seeing more and more, and it's been gradual and kind of slow, but the percentage of streams on Spotify that come from the big three labels continues to decline. I think it's started around like mid 80s when they were reporting this figure. 80% plus of streams were coming from the big three, and I think it's below 70 now. I think it's just an inevitability that it's easier now to go from being an artist in your, house, not caring, just doing it for fun, to people can pick up what you're working on now easily. It's kind of, the distribution is somewhat democratized now, and you don't need a label to win. Now, if you do gain popularity and you're a big artist and all that, I think there's some benefits to having a label, and that's probably going to be the case for a long time. But I just feel like it continues to shift more and more favorably for Spotify.
Yeah, I agree. All right. Where can any listener find this chart, Ryan?
FinChat.io. We mention them every episode because A, I work there, but B, the charts
They are a
really are
sponsor of
wonderful.
us. Yeah,
They've got
more
great data.
importantly.
They've got great data. If you want access to all those charts, it is free. They've got a freemium plan. You can also get 2 weeks free of FinChat Pro automatically. But if you want to upgrade, our code finchat.io/chitchat will get you 15% off any paid plans. We've got plenty of Bubble Watch topics, Brett, that I think we need to
Oh.
touch on.
You-
Newsmax? Should we
yeah, what
talk
happened?
about this?
Yeah, I haven't even followed this closely. What's the stocks trading at now?
I don't know.
81.95? Whoa, wow. Down 65% today, Ryan. Oh
But
my
that's
word.
still okay. 80, whatever, $80, call it.
Did it IPO? Like,
IPO at $10, I think 2 days
okay,
ago. So
2
it's
days
up
ago.
700% in a few days. This is a cable TV business. It's cable news.
Yeah.
And it's
For the right wing one, right?
yes, and it does $155 million in revenue.
And what valuation did you say? Say for the listeners again.
Well, initially it was a $10.7 billion market cap when I wrote this. The stock's gone all over the place, so I assume it's more in like the $7-ish billion
Cheap.
market cap.
Wow.
We're
Cheap now.
looking at a price to gross profit of around just under 150 times when I wrote this. So look, it's cable news. Like this should get, I don't know, halftime sales, maybe like 3 times gross profit, maybe. I mean,
Yeah. I'd rather own some YouTube channels, honestly.
yeah, no, seriously, yeah, I would. The what are we doing here? Who is buying? Okay,
Well,
I kind of
it's
know who's buying
just
this, but
low float traders. It's that's all it is. It's a meme stock. It's just going for what the moment is.
yeah,
That's it.
sign of the times. Bubble
Yeah,
Watch. It deserves to be on Bubble Watch.
it's on Bubble Watch. Yeah, for sure. Do you think? Yeah, maybe that's the wrong way. I was going to ask if they're going to sell before the lockup period because it seems like securities laws don't matter anymore with our friend Trevor Milton. Do you want to talk about that one?
Yeah.
Did you
Saddest news. It's probably the saddest news of the week.
pardoned by the president? Did you? And I want to. I'm going to share the screen here. I'm not sure. It doesn't matter. I'll just talk through it if we can't. If none of the audience can hear it, but I'm gonna show a tweet here.
I think we
He is
just
doing a
talked about it.
documentary of some kind.
Oh my gosh.
Did you see this?
Yeah, let's just talk through this. So give some context on who Trevor Milton is, because some people
Yeah,
might
that's
not know.
fair. He was the CEO and founder of Nikola Motors. They were going to start a hydrogen cell fuel truck company. So semi trucks powered by hydrogen. The technology was not nearly ready for market. There were plenty of kinks to work out, and it was not some sort of viable thing. So they faked the product, and instead, during their product reveal or one of their announcements, they tugged a truck up a hill and then let it slowly roll down and pick up momentum. But apparently he is doing a documentary now, Ryan, and he tweeted out, "You've heard the noise, the headlines, the judgments. Soon you'll hear my side, the one that's driven by resilience, purpose, and a vision that's far from finished." I click play
Entire
here.
world.
Did you hear this?
After you see this truck come to life here tonight, you guys will understand that what we show you, we can actually deliver on.
Trevor was a great salesman. That was his goal. 0 emissions.
Call it.
You ready? You ready for this, Ryan?
So a couple things. A, I hope all the listeners could actually hear that and that wasn't just some gap in the audio. B, apparently the Attorney General has some family relations with Trevor Milton somehow.
Yeah, and he donated to the whatever, the campaign stuff.
Here's my thing. Yeah, okay. No one's changing their mind on you. I'm sorry. Like you rugged a whole bunch of investors. You lied. You were convicted.
Pretty much, yeah. Irrefutably lied.
You rolled the truck down the hill, said it was driving. Okay. If I were in your shoes, I would just be quiet. Just don't say anything.
Yeah.
You've
Yeah,
been
exactly.
pardoned. Like you don't have to, and no one's going, like you can be, this is still the golden age of fraud. I think you can still make it as a fraudster in this world, but you can only do it once. I don't think you get a second bite at the apple.
You don't think a meme coin is coming, Ryan? I smell a meme coin coming from a mile away. He's going to do some absolute BS, and he's going to make some more money. I thought, we didn't watch the full preview there, but I watched it a few times to try to get as much info as possible of what this thing is going to be. It's going to be free on YouTube, so just go watch it. I'll probably watch it just for the last one. There was a guy that they interviewed, no idea what connection is to him, that he said, there were thousands of people at these factories. If it was a fraud, what were these people doing? I was like, yeah, that's not how this works, buddy. And then second, and this is on April 1st. So April Fool's Day, Trevor Milton said in that documentary, the truth is important to me. Are we just in Alice in Wonderland? I think we are. This is getting absolutely ridiculous.
Rates to 10%. This is like, it's so discouraging. Because on the one hand, it feels market euphoric. It's kind of weird because there's like, I'm seeing in the real world valuations of some of the biggest companies in the world, the ones that actually impact the indexes, people's retirements, all that stuff. I'm looking at some reasonable valuations on at least some of them. I like to think that's what's going to impact markets in the long run. But on the other side, the worst companies, not even companies, the worst ideas are getting bid up. And it just needs, like, it makes me feel like we still have ways to go before some of this poorly allocated money is being flushed out. It does remind me of the NFTs. It reminds me of the 2021 bubble.
Yeah. Well, a functioning society has rule of law in capital markets. That's all I'll say. So I better hope, let's hope we keep them.
Before we move on, I want to talk about Blue Chippers Club. Blue Chippers Club was started by two friends of ours with the goal of building a tight-knit community of stock-focused investors. Inside the community, everyone gets to share and break down their portfolios, pitch stocks, receive feedbacks, and participate in weekly calls. Brett and I post on there from time to time. We post some of our show notes, post some of our ideas, try to get some real quality feedback. I really like this idea. That's why we're promoting it on the show. If you are interested in joining, head on over to bluechippersclub.com and hit apply. The link will be in the description. Let's shift gears. I want to talk about rocket companies.
Okay.
Did you see this? See this news?
Yeah, I did. Giant merger or acquisition. They seem to be trying to acquiring all the assets to make a full vertically integrated home buying, home selling process, which sounds like a good idea, but we'll see if they can do it acquisition wise and duct tape everything together.
Yeah, I think that's going to be the tough part.
Idea is easier than execution in this industry.
Yeah, for context, last week, Rocket Companies announced that it was acquiring Redfin for $1.75 billion in all stock. Then a few days later, announced that it is buying Mr. Cooper Group, which is the largest home loan servicing company in the United States, for $9.75 billion in all stock. I can double check, but Rocket Companies has a market cap of, well, right now it says 27 billion, but before this it was probably closer to around 24. So this is huge. Like, this is relative to their size. These are massive deals. This would, of course, be a decent story. You could say Redfin is one of the largest platforms for buying homes in the United States. Rocket Mortgage is one of the largest home loan originators in the United States. And Mr. Cooper Group is the largest loan servicer in the US. So theoretically, they could own the entire life cycle from a home buying or even searching for a home to actually paying off your loan. I kind of like that. And I actually think they would be fairly well equipped to do it. In terms of the acquisitions, Redfin, I believe they were kind of fringe profitability, actually lacked profitability for quite some time. But I think the platform as a user is helpful, and they actually have real brokers that are helpful. They really do help facilitate transactions. They're one of the biggest home buying platforms in the United States. Rocket Companies, Rocket Mortgage, they do a good job with mortgage refi, and they seem to have built a pretty good business around that. And then Mr. Cooper Group, they're actually buying
Strange
this.
names here. Not just random names.
Yeah.
Mr. Cooper Group.
Great business. I think they do just under $1 billion in loan servicing operating income.
Nice. What one did we do with Fabio from Capital Mindset?
We didn't do Mr. Cooper Group, but after the call, he mentioned that was a company he was looking at. And I think he might have owned it. And yeah, they're basically buying this at 10 times servicing revenue, which is much more stable than probably the loan originations business. So I think that acquisition makes a lot of sense. I think Redfin, if you can find a way to kind of make that profitable or at least be sort of a loss leader for the rest of your business, I think that can fit in there as well. The magic will be in whether or not they can actually stitch these businesses together. Now, if you were betting on this company pieced together versus Zillow over the next 5 to 10 years, who do you think performs better?
Pass. I don't like this industry. Yeah, I wish they had Zillow's front end, because Zillow is just so much more popular for people searching for any type of home buying, home renting process. It sucks all the oxygen out of the room in the United States. Feels like it's a good idea though. Redfin just didn't have the front end. Zillow drops the ball on all sorts of stuff, but they do dominate just time spent on the platform.
Yeah, it's a shame that Zillow's just addicted to operating expenses, because they could have a real nice business here, and wasteful acquisitions.
It's similar to people who are pitching CoStar Group and their big push to homes.com as a way to disrupt Zillow, where they're just doing a ton of marketing into that and all that good stuff. I see homes.com ads all the time. It's just not going to work. I go on Zillow. I don't need to go on homes.com.
And that's not just anecdotal evidence. There's some data that kind of backs up what Brett's saying there too. It's my concern, and I like the idea of this. I like the acquisition of Mr. Cooper Group just in general. Seems like a reasonable price. My concern would be, we've seen companies try to go after the residential real estate market in the US aggressively. it like this just isn't a winner take most, or even this is not a winner take all, not a winner take most. I think it's going to be fragmented forever. So any of the like theoretical massive synergies that you're going to have, I just don't see that as that likely of a possibility.
I agree. I
It
agree.
could still
Oh,
do fine because as
yeah.
long as they're buying them at reasonable prices, which it seems like they are, I think they're going to be okay.
Yep. Okay. I have 3 topics that I want to get to before we end here. Turning Point Brands, which listeners have been maybe not clamoring, but multiple listeners have asked us to talk about. We actually got sent a write-up that I haven't read yet. Sorry if you're listening to this, but I will read your write-up. I want to talk about Nintendo Switch 2, the True Liberation Day, and Tesla deliveries. What do you want to do first?
Tesla deliveries, I think we got to talk about that. That's kind of headline news.
That is what we put in the title. We don't need to. We don't actually like to talk about this, but it is. Well, we do like talking about this, but it's good to put in the titles, and I think also fun.
Let me pull
All
up
right.
the actual numbers here.
I got a headline. I'm ahead of you, Ryan. I'm prepped, fully prepped.
Let me pull up
Tesla.
the chart for you.
Yeah. Pull up that chart from FinChat. But I got the number. Tesla reported 336,681 vehicle deliveries in the first quarter of 2025, a 13% decline from a year ago. The company's shares, though, are up 4% today, rebounding from a dip because of a Politico report that Elon Musk could leave his Department of Government Efficiency position. I think all of the political media outlets need to get a lesson from the financial media outlets. Musk uses you for headlines when he needs a little boost because he had this in his back pocket. He knew the deliveries were going to be bad. Is it a coincidence that they announced this on the same day? No. But that's besides the point. For the deliveries, investors were expecting Tesla to report deliveries of between 360,000 and 370,000 vehicles, and they delivered 337,000. So a huge miss. And their production is much higher, so 363,000. And they're probably going to have sharply negative free cash flow, especially because of all their AI, Optimus robot, data center initiatives, whatever it is. Yeah, the business is not doing great right now. Really
No.
nothing else you can say about it.
Deliveries declined, as Brett mentioned, 13% year over year. That is the sharpest drop I think they've maybe ever reported. Maybe in the early days, there might have been some worse because the volume was so low, but at least on record, from what I can see, that's the biggest drop. The
stock's up, Ryan. It's crazy.
Yeah, that is crazy. And
it defies gravity.
2 things. So first off, I love that this is being painted as people aren't buying the cars because of his politics.
Nah, that was happening before this.
Yeah, exactly.
Yeah.
There was, and I think there was actually a Morgan Stanley report that came out, or a sell side note, which was like there was some brand erosion before there's any political involvement. Some of the delivery concerns were already coming to fruition. The other part, it's got to be so frustrating if you are one of the higher ups at Tesla and you're like, because look, I know he does a lot of stuff, but there's no way he's involved in the nitty gritty day-to-day stuff going on at Tesla every day because he has so much things going on, especially when everything he talks about is Doge.
Or XAI. Yeah.
Or XAI, whatever. Like you're in meetings and I guarantee there's like, you basically just have to re-explain everything to him, would be my guess. Like, wait, what's happening here? Why is that factory slow? Like, okay, so I was explaining this last week, but you didn't have time, or you weren't paying attention during our call.
Scrap it all. We're gonna do a fake robot announcement in 2 weeks, okay?
It's got to be frustrating because you have someone who holds a CEO seat who, frankly,
it probably isn't doing anything.
He just isn't involved. There's no way he's involved in the day to day. And just because he steps away from Doge doesn't mean it's gonna fix that. He's got a lot of other things going on too.
If I'm a shareholder in Tesla, aren't you frustrated that the AI quote unquote bull thesis that you were clamoring about over the last 5 years is now getting invested in an entirely new company that you do not own in anything? Am I wrong about that? Wouldn't you be frustrated?
The valuation is,
Oh, yeah, I
I'm
was gonna
so
say,
blown
Ryan.
away that it's holding up.
I pulled it up, $900 billion valuation. Excuse me, $900 billion market cap. You buying? PE
You
of
know what?
about 140, and those earnings are going down and gonna keep going down for the rest of this year.
You know what I think is probably the biggest hiccup here is just overall brand fatigue. Like we talked about this, 3 years ago, which is obviously results have been good since then, but e- eventually that appeal, the sexiness of the Tesla logo, the new car, the EV, it gets competed away because there's a lot of competition that's come online since. But B, it's just, I don't know, it's not quite as, it doesn't feel as cool to drive one. And we're seeing pretty low volumes out of the Cybertruck as well. So it doesn't seem like they've been able to, I guess, shift away from it successfully.
Yeah. Yeah, and the quality, the lack of quality, I guess, control, you can see that in people's opinions. I do have some anecdotal evidence on that. I went on a date, for anyone that's interested, didn't work out. But I did get some good info on Tesla because apparently the person I went on a date with had a friend that was working higher up at Tesla manufacturing over in China, and essentially they told them, compared to all the other automotive companies, do not buy these cars. Our quality control is absolutely way worse than the Toyotas, the Volkswagens, whatever. So she said, all right, that's the one brand I'm not buying anymore, because the guy that literally worked there told her, yeah, we are not following what we're supposed to be doing.
It's also, I could have made this the chart of the week. For the first time, I think since 2018, BYD's revenues have surpassed Tesla. And over the last 12 months, we've seen a stark difference in growth rates. We're seeing BYD continue to grow revenue while Tesla's obviously seeing some struggles.
Yep. Okay. Now, a company we might be interested in, right in our wheelhouse, nicotine pouches. We might be running back the Swedish Match playbook here, Ryan. I don't want to get you too excited, but someone told us that we need to look at Turning Point Brands. Ticker is TPB. We looked at this company a long time ago, if I'm being honest, and the listener told us this because they have the greatest exposure to nicotine pouches as a percentage of their revenue. Now, these are what Turning Point Brands owns. They own Zigzag wrapping papers, which is actually a fantastic, neat, it's not a giant market, but that's a good brand within the industry. They own Stoker's snuff and chewing tobacco, also a highly profitable industry. And they owned FRE, I think it's probably pronounced free, nicotine pouches. The modern oral nicotine pouch business is projected to do $60 million to $80 million in revenue this year. Market cap is $1 billion. They're guiding for around $100 million in EBITDA this year. I'd assume that translates pretty well to cash flow, just due to the great unit economics of all these the nicotine business. Not really concerned about EBITDA to cash flow conversion. Any interest here? The only thing that keeps me held up is maybe they're getting a temporary boost from the Zyn supply shortages. But besides that, this looks like a compelling opportunity.
Yeah, I'd like to look at it a little more, like see where the modern oral volume is coming from, like geographically. Is that international? Is that in the States?
Pretty sure it's United States. Pretty
Okay.
sure.
Yeah, I mean, these are categories that are in our wheelhouse. I'm curious on the volumes of the other businesses, like the wrapping papers, the uh, traditional oral tobacco.
I believe both grew in 2024. I think the nicotine pouches, when they do revenue reporting, they combine the nicotine pouches and Stoker's together. But combined, I think they were both growing.
I think there's some interest for me here.
Yeah.
This would be the only other tobacco business that I own besides Philip Morris. Even though
Did you get rid of
Altria,
BTI, or do you own BTI still?
oh, actually, I do own, I think, like a couple shares of BTI, but man, they're just always underwhelming.
Yeah, you know what would have been a
The
funny
chronic
April Fool
underwhelmers.
you know what would have been a funny April Fool's joke, Ryan, is if you said you were buying Altria Group, which I gotta say, you are the biggest hater on Altria Group stock, and it's done quite well over the last year.
Hey, I was a hater before a year ago. So there's some I feel validated. And I wasn't necessarily a hater. Okay, maybe I was a little bit, but I just liked the alternative in that case, which was Philip Morris. And I've been right on that. So I'm gonna
Yeah,
pat myself on the
honestly,
back
though,
there.
total return is not that much higher than Philip Morris over the last 5 years. Not very
Is
much higher.
Philip Morris is not much higher than Ultra? Is that what you're saying?
Not too much higher, no.
Really?
Yeah,
Interesting.
that dividend reinvestment at an 8% yield, it can be underrated.
Yeah. All right. Any other topics here? Oh, Nintendo Switch 2.
Did you see the announcement?
I saw the commercial for the new Mario Kart.
Okay, are you
About
buying?
time. I actually felt tempted to buy, and I know, like, why would a 25-year-old do that? Why would he spend his money on a Switch 2 and Mario Kart? But it's just the nostalgia, man.
Yeah, I guess we were right in that. We just used wheelhouse like 5 times in a row, but again, we're in that nostalgic wheelhouse for Mario Kart, given when we were kids. The price is going to be, and for anyone that doesn't know, they announced the official specs and some games this morning, actually, so you can go look up a summary online pretty easily or watch the whole thing yourself. The new one will cost the Nintendo Switch 2. It's going to launch on June 5th, and it's going to cost $450. So a big price boost compared to the original one. If we see demand, like unit volumes are strong, that's going to be a huge impact to the revenue line. And then you can get a Nintendo Switch 2 plus Mario Kart bundle. That's $500. Makes sense. They always do that. We're going to have pre-orders. Let's see. Blah, blah, blah. Switch 2 has 4K support, Joy-Con with mouse controls, stuff that gamers care about. Essentially, it's a better one, and you can get up to 120 frames per second and 4K resolution on your televisions, which, again, better graphics, better gameplay. Hopefully, it's a better experience for the users. If we look at the games that are coming, and there's 2 important things I saw from like trying to forecast earnings potential. One, the new Mario Kart World that Ryan mentioned. That's going to be, I think, released along with the Nintendo Switch 2, and it's
And
essentially a new way to
exclusive to the Switch 2.
exclusive. Sure, yeah, exactly. And it's kind of a new way to play, I guess. You can play the old way, but I guess you can have 24 drivers, and essentially, instead of getting like forced back to the track, you can go off level and explore. So I don't know what kids are going to enjoy that or not, but it seems like people were excited about that. And given that Mario Kart sells, or excuse me, the old one sold, I think like 60 million copies. This is a huge, if they can keep up that momentum with Nintendo Switch 2 and this new Mario Kart game, there is just huge profit potential and keeping that momentum going from an earnings standpoint. Then the second thing is they are offering like fairly cheap, I'm assuming it's about $20 or so, upgrades for if you bought some of the like the Zelda games or whatever, you can buy updated versions for the Nintendo Switch 2, which I think is great. So yeah, no big surprises, no big negatives. The
Here's my
Pokemon game is
question.
coming. From an earnings standpoint, you should see a huge boost over the next 18 months because we have Mario Kart coming out and a Pokemon game coming out later this year.
Here's my
That's
question to you.
yeah.
What day did you say Switch 2 is being released?
June 5th, so it's their Q1.
Okay. June 5, 2026, a year out from launch. What number would you be disappointed to see in terms of units of hardware sold?
It's hard to tell because I don't know if they're purposefully going to just have like 15 million or something like that available, and that's their plan, and they're not going to be able to go over that. But I would say anything significantly under like 14 to 15 million would be a big disappointment. I'd say about 15 million, I wouldn't be disappointed. That seems like a good figure. 20 million would be a nice. It's
That'd be a
really
nice
hard to
boost.
tell, though. I would the thing with this one, because it's not a giant upgrade from what I mean is like the same type of playing. I would just hope over the next 3 to 5 years, we see consistent upgrades from the first generation Switch players.
Sure.
So if we're getting at least 10 to 15 million units bought per year, that's a good sign. But more importantly is software sales, because they're still going to have stuff available on the original Switch. So as long as software sales are fine, unit sales, they're good, but we just need active players. And active players purchasing games, add-on content, Nintendo Switch Online, things like that.
Okay, I think we're running up on time here. Quick question for you. Beaten up stocks that look attractive right now. What are the ones top of mind for you?
Yeah, listener did ask this, I believe, on Twitter. I usually ask on Twitter or Substack chat for any topics we can talk about. Sometimes, there's people say, well, automotive companies are going to get impacted by tariffs. Sorry, we're not going to talk about that. There are some things we might talk about, though, and this is one of them. I pulled up my watch list in preparation. The one that came to top of mind is Airbnb. Now, the drawdown hasn't been that severe, and I don't think it's a dirt cheap stock at the moment. If we look at the drawdown here on FinChat, 43% from the IPO, but maybe we'll do over the last year, 25%. I'd say they're slightly beaten down, but I like the business. I think there's a lot of upside for them to do all this add-on content that they are hopefully going to announce sometime here soon. So that was the one that came to top of mind. What about you, Ryan?
Airbnb is up there for me. Google's been beaten down quite a bit. Sorry, it's boring, but I like it here. And let's say search really was at risk. Okay, for anyone that say that just here's the narrative, Google's being disrupted, just go read one earnings call, read the last conference call. And after you read it, ask yourself, does it feel like they're being disrupted? My suspicion is that you'll be telling yourself no. And I really think that's the case. They have so many platforms that just dominate and I think they have 9 platforms, not even including Google search, that have more than a billion users.
And by 2030, they're going to be a huge cloud business. So I don't know. Yeah. It's I think will be hard to lose money if you hold Alphabet for the next 10 years, but nothing is guaranteed. I like that pick as well.
All right. I think that's going to do it. You want to take us out here, Brett?
Yeah, let's do it. Anyone, for the listeners, I tried to test out that video sharing thing because that preview is absolutely hilarious. If the video didn't play, because I can't tell if the listeners can actually hear that, let us know. I'll probably pick it up in the post-production and check that out as well. But it can be fun to share videos, CNBC clips, Bill Ackman talking, stuff like that. But besides that, let's hit the disclosure. If you like this episode, give us a 5-star review on Spotify or Apple Podcasts. Subscribe to the show on Substack. Get our free newsletter and access to our chat community. As a disclosure, we are not financial advisors. Anything we say on this show is not formal advice or recommendation. Ryan, I, or any podcast guest may hold securities discussed in this podcast, may have held them in the past, and may buy, sell, or hold them in the future. Thank you, everyone, for tuning in to the live episode or listening wherever you get your podcasts, and we'll see you next time. All right. Plenty to talk about this week.
Yeah.
Liberation Day. Not for Mexico. Mexico.
What are we calling Liberation Day? I'm not even seeing this.
That's what they're calling the tariff announcement. Trump is calling it National Liberation Day.
Oh God.
Yeah. That's why.
I see all the jokes about tariffs. I never even see the news.
Yeah. Well, Wall Street Journal usually has some decent updates. Honestly, it's annoying. They just focus on Musk and Trump updates. I don't want to read all this.